everybody is just scrambling for every last dollar, and people can't retire because they don't know if their savings are how long their savings will last because they're gonna be debased.
What should be the appropriate Bitcoin allocation?
Yeah. The Bitcoin price is roughly at 100K.
Right.
I think a lot of people were anticipating it for it to be a lot higher by now.
Yeah,
People are talking about diminishing returns. They're saying the cycles. What are your thoughts on that?
Yeah, so look, it's doing just what it should be doing. The next stop is at 140. People ask me, what do you think the best thing about Bitcoin is? I'd say the best thing about Bitcoin is that it might end wars.
That's very powerful. Could you elaborate a little bit on that?
Just saying do what's right.
Okay.
You know, just saying give back and do what's right. You know, she was deeply religious, and you know, I've been given these gifts. You know, the education, the intelligence, growing up in a middle class, upper middle class family. And you know, I've seen how broken this is, and I've seen people hurting from it. And I thought, you know, someday I'll be dead. I want my kids and my grandkids to say, hey, that guy did it right.
That's very powerful. Wow. I gotta take a moment here.
Yeah, sorry about that.
No.
I don't generally get emotional, but you kind of hit a hot button for me.
Yeah, it's wow. So let's talk a little bit about the middle class upbringing, because I think that's something that has completely been gutted because of essentially the fiat system.
Yeah.
How will Bitcoin bring that back?
Well, you know, it'll create fairness across the board. People won't have to worry about money. People will be able to retire again. It's just going to be a fair world. It's going to be a better world. We're all going to benefit from this technology. There's so many great things happening in the world, Nico. I mean, think about what technology has done. I mean, think about all the benefits we've had. Think about how TVs and, you know, I was saying earlier today, I remember being in college as a freshman, and long distance calls were expensive. So I got to talk to my parents once every week for 5 minutes because, you know, that was all I wanted to spend on long distance phone calls. Well, your phone calls now are effectively free anywhere in the world, right? This is the benefit of technology. That's coming to all of us. So all of our lives are going to get much better as a result of the technical innovations that we're seeing right now, okay? But to make sure they're fairly distributed, we got to have a fair system, or else the guys at the top are going to keep raking off, and, you know, all of their piece. And benefiting at the expense of the rest of us. And that's what's going on
Absolutely.
now. So, I mean, I know, and I think you feel this way too. And if you talk to Bitcoiners, I mean, I'm so hopeful and so optimistic and so positive. I mean, you know, like I watched my dad retire with some money, not a lot, some money. By the time he passed, he was down, you know, it had whittled, its purchasing power was gone. I mean, I have 80-year-old friends, 70 and 80-year-old friends who are still doing work. They have money, they have their houses paid for, and they have savings. And they're like, well, I don't know how long I'm going to live, and I might run out of money, given how, you know, inflation is eating me up, right? So you can't really retire in this system safely. You know what I mean?
Yeah.
I mean, just having that, just knowing that your purchasing power was going to be preserved, it's a very powerful thing.
Do you think, Larry, do you think that, because you've identified one of the things that I appreciate about the gold bugs, right, and the whole gold movement is that you guys really started this, the whole idea of sound money.
Yeah.
And you guys really identified the problems very accurately. Where do you think gold came up short?
So politically, they figured out how to neuter it. I mean, right?
How did they do that exactly?
Well, they paper gold, going off the gold standard, fractional reserve banking. I mean, it's a long litany of tales. A lot of it's laid out in the book, though, so you'll get a picture of how they did it. But gold failed. I mean, it's hard to verify, it's hard to transfer, it's heavy. You can cover tungsten and gold. I mean, there've been fake gold bars. It just didn't work. And we moved to a system of ledgers and credits, and we moved to a fractional reserve banking system that basically allowed the banks to create money at will. And so what happened is they got way ahead of the gold supply, and the money effectively became unsound. Now, Lynn would argue that had to happen at an engineering level no matter what, and she may be right. I would argue that there were places where politics intervened and shoved it ahead, the biggest one being 71. I mean, Nixon had it. I mean, a lot of people say, well, Nixon had to do what he did, and that's not true. Nixon could have let the gold price float. We would have had gold as a neutral reserve currency, and we would not have had the inflation that we've now had. We would not, we could have maintained Glass-Steagall as an example, and the banks wouldn't have been able to pull off 2008 the way they did.
Yeah.
I mean, so there were two pieces to it. There was politics, And then there was some of just the development of technology that kind of left gold in the dust. I mean, once the telegraph got developed, I mean, before that, gold was shipped overseas. I mean, the Pony Express originally, watch Butch Cassidy. I mean, they were blowing up the trains that carried the gold with the payroll. Do you know what I mean? I mean, gold was money, and you had to move it around for final settlement. Well, you had a telegraph, and suddenly you could start keeping a ledger. So a lot of reasons gold failed, but it did fail, and the failure accelerated a lot with the futures and with actually with Bill Clinton and Rubin and Larry Summers. There was an article a paper that Summers published called something's paradox, Gibson's paradox. So in order to get reelected, Clinton figured out that if they could mask the price of gold going up, they could create inflation and not have it look inflationary. The bond vigilantes wouldn't know what was going on. And so Rubin, who was an ex-gold trader at Goldman Sachs, figured out how to create a lot of paper gold. And so, right now, and what's going on as we speak is that the LBMA is having trouble making deliveries, which would maybe argue that we're close to the point at which the LBMA blows up. And that's because those of us in the gold camp know this. We believe there are as many as 100 paper claims for an ounce of gold for every ounce that really exists.
That's
right?
crazy.
So think about that. That's a game of musical chairs where if everyone with a paper claim came and said, hey,
I'll take it.
I'll take the ounces, please. Thank you very much. The ounces wouldn't be there. Not at today's.
Instead of a bank run, it's a gold run.
It's a gold run. Yeah, and just to give you a sense of how much fiat we've created, there's another good chart in the book done by my friend Brent Santiago. A really great chart. So there was a time in the 70s when you could actually take the U.S. money supply and you could divide it by the 261 million ounces of gold that we theoretically own, and you came up with a $35 reference price. That was true back then. If you did that same calculation, I've said this many times, if you did that same calculation today, took all of the money supply outstanding today, divided it by those 200, gold would need to be at $89,000 an ounce. Okay, gold's at $2,900 right now. So. Yeah. It's a long ways away. The point there is we've created a lot of paper gold.
Absolutely. And it's also, its physical characteristics make it very difficult for you to withdraw.
It's hard. I mean, you and I don't trade in gold anymore. I mean, it's pretty and it'll eventually.
I have to admit though, and I'm a millennial, I do own gold bars.
Good for you.
And they feel really good in your hand.
Attaboy. I got a bunch of coins and I got a bunch of silver coins. Silver has a lot of utility. Its stock to flow sucks and it hasn't gone up as much as gold and it's being demonetized. But I tell you where silver in a mandible scenario, silver would be very valuable because most people know what a 1 ounce silver coin is worth. It's $30. And so, there's a couple of chickens or some eggs or maybe a tank of gasoline or whatever. Yeah. I mean, if the credit cards aren't working, I'm guessing there'll be people who, farmers and others who will say, yeah, you can pay me in silver.
Absolutely.
I'll take it.
100%. Does Bitcoin replace gold? Do you see it reaching the market cap of gold? Do you see it reaching the market cap of gold very quickly?
Yeah, I do. I mean, it's actually arguably a lot closer than people think. So the market cap of gold right now is about $18 billion. The market cap of Bitcoin is about $1 trillion. My market cap of Bitcoin, as we know, is about 2 trillion, round numbers. But if you think of that 18 trillion of gold, really only about a quarter to a third of it is in bars and coins that you and I can buy. So about a quarter of it's in antiques and in museums and antiquities. So, we're not going to go melt down the gold in the British Museum, right? It's staying there. About a quarter of it's sitting in central banks. Actually, a little less than a quarter. And then the balance is around women's necks in, in India and China and here. I mean, it's jewelry. And by the way, if it gets high enough, I mean, you're going to see women, selling their gold jewelry. I mean, $89,000 an ounce. I'm guessing there's some bracelets that'll get turned in.
Absolutely.
But so my point is that to flip gold, let's say the investable gold is 4 to 6 trillion, and the investable Bitcoin right now is, 2 trillion, maybe 3x from here, and Bitcoin is kind of flipping the investable gold, right? Interesting numbers.
Absolutely. At the time of recording, the Bitcoin price is roughly at 100K.
Right.
I think a lot of people were anticipating it for it to be a lot higher by now.
Yeah,
people were talking about diminishing returns. They're saying the cycles. What are your thoughts on that?
Yeah, so look, it's doing just what it should be doing. It's just marching up relentlessly. The drawbacks are slow. We were at the 58K club for a while. We went to 100. It's a nice move of, 42 grand. We're now building up what in technical investing analysis they call a flag between kind of 90 and 106. Okay, let's add another 42 to that. I think the next stop is at 140. I mean, to me, these flags with moves, this is very good, healthy, constructive development. When we go from, let's call it 140 to 250 really fast, which might happen, my sense is it's going to be ahead of itself.
Okay.
And that's when you might, I don't know what the top of this cycle is. I mean, I look at a lot of things, including the power law and historical cycles and how far it comes off the base. feels to me like the top of the cycle is between 200 and 300, and then we'll have a pullback. But I think the pullbacks are getting smaller. And I think at some point, this power law model is going to break to the upside, and we're not going to have pullbacks, because at that point, this is Parker Lewis's, the gradually and then suddenly. I mean, the suddenly phase, Saylor made this point when I was on stage with him in Madeira, and he said, look, I can see what's going to happen. We're going to go to 300. A lot of people think, holy shit, this has been amazing. I'm selling now. That's going to be a mistake. And it's going to go to 700 and a million. They're not going to be able to get back in.
Yeah.
So
they're not going to be able to get the same amount of coins.
No, I mean, I think generally speaking, my view is you sell coins, don't count on getting them back.
Yeah. This cycle hasn't really started. The bull part of this cycle has started, but the euphoria phase of this cycle hasn't started yet.
I completely agree. I completely agree. And I think it comes, frankly, I think it comes in the next year. I think between, we're talking now, it's February. I think between now and February, March of next year, they're going to be fireworks.
Yeah.
Real fireworks.
I completely agree. Now, I have a question from you, and I'm going to pose as a Keynesian economist. Yeah. If there isn't inflation, won't people just hoard money?
Yeah, that's bullshit, and I deal with it in the book. I mean, do you not eat because there's, if you think steak's going to be cheaper in the future, you're going to stop eating, waiting for, okay, we all know your TV 5 years from now will be cheaper than a TV today. You're going to stop buying TVs? No, you want to watch football today, you're going to buy one. It's all just horse shit. I mean, you might stop buying frivolous shit. You might stop wasting your money on gambling and doing other things to try and beat inflation. But humans have needs, and you're going to pay good value for things you need. And so the notion, this idea of a savings glut, I mean, this is all just Keynes. This is all just to support their system. It's a lie. It's just a total lie. Deflation is good. Deflation means that you can buy more with less dollars. I mean, look at the people from 1870 to 1913. Their lives improved incredibly. I mean, they went from, outhouses to indoor plumbing. They had no electricity. A lot of them by, the 20s and 30s, they had electricity. They were eating better food. They, Sears Roebuck came out with a catalog. They could buy high quality goods. I mean, all of it. And during that time frame, prices were falling. But GDP and output, I mean, the whole idea of measuring output by GDP growth, and then having that, somehow we've got to get to a measure of output that's based on units, not on dollars. Because, if you're understating inflation, and you say you got 3% GDP growth, but you've got 5%, you really have 5% inflation, well, in fact, you're actually in a recession. It's not like the dollar value of cars that we're selling, it's how many cars are we selling. It's the number of units. So unit growth is what suggests that an economy is benefiting, not dollar value growth. Right?
And then my next question, which you partly answered, which is, can money exist without inflation?
Of course it can. Oh, of course it can. It has. I mean, to a degree. I mean, gold always had a certain amount of inflation, but absolutely. Abso-friggin-lutely. Anyone who says it can't is wrong.
How will people deal with wages, for example?
Well, I mean, wages will get set in the marketplace. The fact that your wage doesn't go up will be okay, because you'll have the same wage, but it'll buy more in the future, and you'll look forward to that. And it will shift everyone's time preference. You will start thinking about, how do I buy things that last, and how do I save for the future, and how you'll know that you have an alternative and a reward for being patient, and for not wasting money on stupid shit.
Yeah, I mean, it's a total mind shift.
It's a total mind shift. I mean, Keynes has a nice quote in the book where he says, somewhere we shifted from valuing honesty and hard work to valuing consumption and consumerism. Mm-hmm. I mean, I can foresee a time where owning a really snazzy car would just become, viewed as being, it's just like, a person's stupid. Why would they ever do that? You don't need that. It doesn't benefit them. Do you know what I mean?
Yeah, absolutely.
I mean, I think, and you'll want to buy things that last.
I mean, you see this in Bitcoin culture.
Yeah.
We all live below our means.
Exactly.
We try to spend as little money.
It affects everything. It affects art. I mean, look at the buildings that were built pre-war in America.
Yeah.
They're still standing, and they're beautiful. Some of the architecture is beautiful. Look at the buildings we're building today.
Yeah.
They're cheap. They're schlocky. They fall down. They don't last.
Yeah.
Do you know what I mean?
Yeah.
I mean, it'll change everything. It'll change the mindset to one of thinking about the long term. I mean, one of the terrible things that Keynes said was, in the long term, we're all dead, which is kind of like a party on, Garth. Let's, screw the seed corn, screw your relatives.
Yeah.
And in fact, the right way society should work is for parents and families to want their relatives to be better off them, to want to save, to invest in their education, to invest in giving them a legacy, to invest in giving them a future. That's what's good, not partying and leaving them nothing but debt and, you know, what we've left people now.
Of course, fast times, right?
Need liquidity without having to sell your Bitcoin? For more than 6 years now, Ledn has been the trusted choice for Bitcoin-backed lending with transparency, security, and trust at their core. I absolutely love these guys, and I personally not only have an account with them, but also a loan. And some of the key features that I love about Ledn is the fact that there are no monthly payments. You pay at the end of the term. You also have the ability to roll over the loan as well, and you can pay it back whenever you want. Essentially what they do is that they help their clients unlock the liquidity of their BTC, allowing you to HODL while still accessing the wealth of your Bitcoin. They've been battle tested with their focus on transparency, security, and trust, allowing them to build a proven track record of client success and security, helping tens of thousands of clients harness the value of their digital assets with confidence and peace of mind. Learn more about what your BTC can do for you today. Simply Bitcoin viewers get 0.25% off their first loan by using the link in the video/podcast description. What are you waiting for? Head over to ledn.io today.